Welcome to Common Sense Investing. My name is Cameron, and you're here for another Monday evening live stream talking about microcap stocks, which is what I love to do, and I might as well get straight into it because there is a lot to talk about. Right. So as usual, I have a presentation for you. I have a bunch of companies, stocks that I would like to talk about this week. It's been so busy, right? I love October. October is the month of investor conferences. It is literally information overload. I am researching so many bloody stocks. I did this back in like February, March of this year, where I researched hundreds of stocks. And I find that I'm doing it again here in September and October, just in preparation for all these investor conferences. So presentation, I'm going to talk a lot about stocks here, a whole bunch of different stocks. Feel free to hit me up in the comments, ask questions, put in statements. At the end of my presentation, I will definitely have time to do like a little questions and answers period. We could talk about whatever stocks you want to talk about, as well as if something relevant pops up, I will try and, talk about it, right? Hello. We are missing out on Bitfarms. Yeah, look, I have missed out on a lot over my lifetime, right? The trick is you find the space, you find the niche for you that makes you money. And that's what I always talk about, right? These stocks that I talk about here today, some investors might find my channel and say, yeah, this is a pretty good channel and this guy covers some good stocks, but it's not my experience. It's not my niche. And that's totally fine because that's what I tell people to do, right? Is we all have different experience levels. We all have different experience in our careers, our education, what we understand as a person. And the best way for you to make money is the absolute best way to invest. It's not in one specific stock or one specific niche. In my opinion, it is what's best for you. Why this long rant? Because I know nothing about Bitfarms. That would not be investing for me. That would be guessing. Similar to how right now commodities. I've never really been a commodities investor. I tried for a while, for a little bit. I found that it was a space that it was more about who you know and not what you know, because there was a lot of insider information bouncing around and you needed to have that information to make money consistently. And so for me, it's not about one specific niche like Bitfarms, which I absolutely know nothing about, or commodities, which is absolutely not my favorite. I kind of found my niche where I make money. And some of these stocks that I'm going to show you today is my niche. Now, in saying that, there's ups and downs. I know everybody right now is making money in gold stocks. That is absolutely fantastic. Go where you can absolutely make the most money. Now, where I tend to make money is on these investing conferences, right? So good information forces me to research a bunch of stocks and gets me in contact with management teams, CEOs, and other investors that are talking about some of these stocks where we exchange information. So I love the investor conferences. And when you can find these investor conferences that kind of are looking for the same types of stocks that I am looking for, it's definitely really helpful. So this one here, this company list here, is the Small Cap Discoveries Investor Conference that just wrapped up September 29th and 30th. There's around 50 different companies that presented. I realize that I have not talked about these stocks yet. Small Cap Discoveries just released another CEO interview here, this time with Matrix. This was just released today. And one of the things you have to realize is that all of these companies presented during Small Cap Discoveries, and I believe that the plan is for Small Cap Discoveries to release these videos, release these presentations to the public in about 2 weeks or so. And we're already a few days after the conference, so maybe a little bit shorter than that. But if you have interest in any of these companies, keep in mind that there's going to be public CEO presentations coming up in the next couple weeks for these companies, which gives you the ability to do a little bit more research. And of course, if you're interested in these types of companies, consider taking a look at joining Small Cap Discoveries, because this is when you can attend the investor conference in Vancouver and you get access to all these different companies in one-on-one presentations. Now, Why is the thumbnail for today's video this list? Because this is the next investor conference. This is the Cantech partnered with Atrium Research conference on October 9th. And so it's the one coming up. So in this video today on this live stream, I'm going to talk about some of these companies that I'm looking at for the upcoming October 9th presentation from Cantech and Atrium, as well as I'm going to give a little bit of a recap here on some of the stocks that kind of floated my boat at the Small Cap Discoveries Conference in Vancouver. I know Kraken is overvalued, but this thing just loves green days, and it's thanks to you. You got in at 30 cents. That is fantastic. That's like a 15x stock at this point, so absolutely congratulations. Yes, Kraken Robotics has been an outstanding company. And I'm going to talk about a lot of companies that I hope are the next Kraken Robotics, so keep in mind, I do really mean this. This is not financial advice. That is not the intent of this channel. I am not a stock picking channel. None of this is a solicitation to buy, sell, or hold a stock. It's a bunch of my opinions. It's a bunch of communication. I could be wrong. Basically, what I'm trying to do is talk about these companies to give them a little bit of exposure so you could figure out which ones are best for you, go to do your own research, and make your own decisions. Because this is how I invest here at Common Sense Investing and not necessarily how to invest. So yes, let's talk about a few of these. Now, keep in mind, big long list, right, that presented at Small Cap Discoveries, 50 different companies. I didn't get to see all of them, right? I was speaking with investors. I really appreciate everybody that came up and talked to me at this conference. I estimate I probably shook hands with about 40 to 45 people that watch my channel, who recognized me in person, who came up and introduced themselves. Thank you. I really appreciate it. Just being recognized like that and having somebody come up and say, hey, I enjoy what you do. Please keep doing it. Really huge motivation for me, and I really, really appreciate it. In saying that, this disclaimer is more about the companies, because if you're a company on this list and you're watching this video and you're like, well, Cameron didn't mention me, I thought I had a pretty good presentation. Keep in mind, I may not have just seen you, right? I only had so much time to talk to some specific companies. I was really there to speak to a lot of different investors and not necessarily the companies. In saying that, I did speak to a few that I wanted to talk about, or at least pitch and give a little shout out here in today's live stream. One of them is McCoy Global. So I really love McCoy Global. I introduced it. I forget where I introduced it. It was around $2.85. I forget if it was earlier in 2024, whether it was kind of down around here, but really around $2.85 is where I got interested in McCoy Global. It shot up to basically $4.50. Everybody thought it was, going to the moon here after the Trump thing. And then, it's taken a hit since then. Oil prices are down. OPEC is releasing more oil. The U.S. maybe, despite the whole drill baby drill thing that Trump has been saying, maybe hasn't been drilling as much as people expected, but it really crashed. They also, shout out to them. They were very honest on earnings, and they basically warned the market that they expect their next quarter to be a little bit weak. And because of that honesty from their CEO, a lot of investors took that opportunity to exit the stock. And you could see here that the stock crashed pretty quickly, right? Good companies find a way to build back up. I really have to give them full credit. They were honest with investors here. But because you're honest with investors and you're willing to tell investors about the bad news, hey, we might have a weak quarter coming up, I wanted to tell you about that now. That also means that investors trust you more when you have good news to talk about. They're not thinking that this guy's full of shit, because you've already proved you weren't by being willing to discuss the issues, the concerning issues, the warning signs. So when the company comes out and says, hey, we have some real good potential future contracts coming up, there's no reason for the market to not believe them. And that's basically what's been happening with McCoy Global. Because after, crashing down here to a share price, they went from $4.50 all the way down to just about $3 here. And for a very stable company that is a very volatile share price, and ever since $3, they have now been crawling their way back out of that basement. They're back up to $3.75 Canadian. And that was because they're going to investor conferences like this and they're saying, yeah, we know, guys, that the next quarter might be a little bit weak because of this and this and this, and we told you about that. However, if you look at our 2026, what we have lined up, if you look at our 2027, what we have lined up, investors have no reason to doubt them when they say that. So share price has been performing much better, and that is specifically, in my opinion, thanks to good honesty from the management, from the CEO at McCoy Global. So congratulations to them. This is an interesting one. I find like I'm late to cannabis, but I'm still early to cannabis, if that makes any sense, right? I can look at a chart here at Decibel, which was at, 6-7 cents for a long time, and think, well, Cameron, why didn't you buy in here? You missed out this 100% gain right here from basically 6 to 7 cents to about 12 to 13 cents. I kick myself on that. But at the same time, a lot of these cannabis companies, the reason they were down here in share price was they did have more risk, right? They didn't have a few quarters in a row of success. They had more debt. It was unsure how they were going to manage their debt. They didn't have as much structured, consistent cash flow. So one of the reasons why share price is up is these companies are starting to find that consistency. We talked about this, not just in cannabis, but in a lot of different new industries, like robotics with Kraken rising to the top, and artificial intelligence. How many AI stocks are down 99% or bankrupt? And then the best ones over time will rise to the top. That is what we're seeing with cannabis stocks, is the best cannabis stocks are starting to rise to the top. I started providing some coverage on Decibel here at around 13 cents. It went all the way down to about 12.5 cents here for a while, where people had an opportunity to buy. I would suggest their presentation at Small Cap Discoveries was pretty good. It hit about 15 cents today. It's up to about 14.5 cents Canadian. This is right after the Small Cap Discoveries investor conference. So it looks like hopefully maybe another little small bench up. And this is the entire point of companies going to these investor conferences. Not the entire point, I guess. You really want those stable, sticky shareholders. But if you can get those stable, sticky shareholders, then it reduces the amount of buying pressure you need to get a share price bump, which is what Decibel Cannabis is getting. So great presentation at Small Cap Discoveries. And of course, it's up, a penny and a half or whatever, which is good to see. A lot of other cannabis stocks right now are down. Oxley is down 1 or 2 pennies. Decibel is up 1 or 2 pennies. So you definitely get that comparison and contrast between the two cannabis companies, and Decibel really had a great presentation. So shout out to them. Grey Wolf Animal Health was the only stock that I bought a position in during the Small Cap Discoveries conference. And it was a surprise stock to me because I didn't plan on buying any stocks at the conference, and I definitely didn't plan on buying Grey Wolf Animal Health. This is a company way early. It was like February of 2024. I actually have videos on Grey Wolf Animal Health. I like this company. I like what they were doing. I made some videos, and then I kind of forgot about them. I got distracted, right? We had so many other good companies, Zoomed, NTG Clarity, all these other companies that were absolutely going to the moon and making people money. D-Box, right? You get distracted by all the most recent winning stocks, and you kind of forget about these older ones that you've been covering for a while. But I introduced them to the market at around 80 cents, I think it was. So it was down around these levels. And now we're up to $1.35. I bought at the conference at like $1.30 or $1.31 on the spot as I was watching the presentation. Now this, again, should be another video, another CEO presentation that should be released to the public in a couple weeks. So I'm super excited that you get to watch the same thing that I did that made me buy. But basically, listen to how many times they talk about compounding, how they're going to be able to take what they have already built and compound it into the future without as much CapEx spending or potentially as much OpEx spending, right? They are talking about now having a significantly growing, compounding business with reduced expenses and higher revenue growth than what they've been getting. That's at least the promises. We'll watch the execution and see if they get there. But I have to say, fantastic presentation from Grey Wolf Animal Health. Really brought me back to why I was interested in them about 18 months ago, and you know, bringing me back to that core concept of what they're doing, which is pharmacy for both humans but also animals, which is a huge and growing niche that they're trying to solve, and they're kind of the big fish in a small pond at this point. Absolutely love their presentation. Great work. I really like Grey Wolf Animal Health. And then finally, he will not come out and say it because he's too humble, but Paul Andreola of Small Cap Discoveries, Paul and Trevor hosted the entire conference, which is the best run event I think I've ever been to. I mean, governments especially could have teams of 50 people trying to run an event, and they would not have had an event half as efficient as what Small Cap Discoveries pulled off in Vancouver. In the meantime, throughout all this event, Paul Andreola is the CEO of Name Silo Technologies, and he has to be humble about that company and be careful about what he says. But again, we've got another new 52-week high for Name Silo here at $1.60 Canadian. And I was talking about 52-week highs on Name Silo back here and then back here, and I was saying, you know, this is the type of company where it seems like it doesn't matter at what point along this line over the past year. At whatever point you buy, you make money on this stock. It just keeps going up. This is one of the most consistent. I mean, I'm going to go through 15 charts in this presentation today for this live stream, and you're not going to find another stock, especially a microcap stock, that is just up so consistently as Name Silo is. So again, conference a little wobbly here because people stop buying stocks going into the conference because they're trying to save up cash. And then you go to Small Cap Discoveries and watch the presentation for Name Silo. And I have to say, this was really a coming of age for this tiny company, because back here, nobody really knew about it. Even some people that are in the small cap discovery space weren't really always paying attention to Name Silo. It was such a tiny company. Back at 30 cents, when it was kind of first getting researched by, you know, Scott and a few other people, it was completely unheard of, right? And now everybody's talking about it. So when you say everybody's talking about it, I mean, you go look at the quality investors that are trying to value Name Silo right now, you know, saying potentially here it could be 240 million market cap. They just purchased 100% ownership of Sewerview. Bargain Bin Stocks here is talking about, you know, does your valuation probably doesn't even include the stakes that Name Silo has in Alchemy, Childcare, Atlas, Ola Media, and the Sewerview, right? Coconut Capital, you know, basically keeping up to speed with what's happening with Name Silo. And I have to give a shout out to these people. If you want to continue following Name Silo, Kyle Grieve, Coconut Capital, Bargain Bin Stocks, go look them up on X, and it will provide you a little bit more context around the news that comes out, as well as, you know, keeping up to date on some of the news that comes out, because we can't always rely on Paul to provide opinion on this stock because he's obviously the CEO. So if you're with Small Cap Discoveries and you're waiting for Paul to give you opinion on his own company, you're going to be waiting a long time, right? So go follow some of these other great investors that are providing coverage on this company, and hopefully can figure out, you know, where is this valuation going? Because this stock has been unstoppable. Can this continue? For how long? And where do you get that value from, right? Because one of the things that people were really impressed at the conference, and you will see coming up in this presentation again once it goes public, is Sewerview and what this is going to mean to Name Silo. Potentially more cash coming for them, which puts more cash in the hands of Paul Andreola to do more things like buy more Sewerviews. So, I mean, it really a coming of age for Name Silo, and absolutely congratulations to shareholders. This stock has been absolutely crushing it, right? And while I'm giving a shout out, you know, I give shout outs here to all these other investors, Kyle Grieve, Coconut Capital, Bargain Bin Stocks. Where can you find them? All these posts are on X. I really have to give a shout out to X here. I joined X, I think it was about 14, 15 months ago after my YouTube channel got canceled. And when my YouTube channel, my first channel got canceled, I was wiped out. I had no other platform. I wasn't on LinkedIn. I wasn't on X. I just had YouTube. And so X, I went into X very skeptical, thinking I wasn't going to like it. This seems like a silly place to be talking about stocks. I am completely wrong. I mean, as far as good opinion, up to date on news, being able to ask questions, a better integrated message system now where you could speak to people a little bit more fluently, freedom of expression, freedom of speech, where I could be positive or negative on a stock. I could block people that don't like me if I choose to, if they're just being assholes kind of thing. I really have to give a shout out to X. If you're an investor and you're not on the X platform looking at stocks, you are really missing out, at least in my opinion. So go give it a look. Finally, I have to give a shout out to NTG Clarity Networks. Maybe a bit biased here at this point. I do like this company. I do like their VP of Operations, Adam Zaglul. I interviewed Adam. He was nice enough to give me a short interview. I will have my own video coming out on small cap discoveries probably in the next couple weeks, where I'm going to show people what to expect when you go to an investor conference. Like, I'm going to try to lay it out on what everything looks like, what you get, what you don't get, what you should expect, what you should not expect. And I met again with NTG Clarity Networks. You know, credit to people in my Discord who were intelligently buying this company. I think it bottomed out here at around $1.64 Canadian. And I know a lot of people were buying it around $1.65 Canadian. Absolutely just crushed the whole timing the bottom thing, or at least hopefully, right? We've had this, you know, cup and potential handle sitting right here, now sitting at $1.87, just waiting on the next news. Good news or bad news? What's the next quarter going to look like for NTG Clarity Networks? They are presenting at Planet Microcap Toronto, October 21st. And then shortly after that, they should have their Q3 earnings coming out, which should hopefully be improved from their Q2 earnings, which did have some higher expenses because they are ramping up for some more growth. I can't believe this is still only an $87 million market cap company. It feels like it should be a little bit more. And I mean, the interesting thing for me always is when you're a new microcap investor, the hard thing to get used to is this volatility, because you look at this is NTG Clarity Networks revenue, trailing 12 months, of course, you know, from quarter to quarter, it is a little bit more lumpy, but trailing 12-month revenue, trailing 12-month operating income, trailing 12-month net income right here. The only reason share price is kind of down a little bit here, hopefully, I'm not saying for sure, but they have been spending for growth, and their Q1 and their Q2 was a little bit weak. We hope to see a little bit of a rebound here in Q3, Q4, and then beyond that in 2026. Hopefully they are able to achieve that, but it is fascinating just to see this, you know, crazy volatile share price, especially recently that's been, you know, straight down since about June of 2025, when this is their trailing 12-month numbers there. That really doesn't look like it matches up. So I hope that you know, they can deliver for their shareholders and have an improved back half of 2025. Those are some of the bigger, more well-known companies. I'll talk about a few of the higher risk ones here in a second, because these tiny little companies deserve a shout out too, right? Nevis Brands. Nevis? Must be Nevis. Happy Apple. Cannabis in a bottle. That's what this company does. You know, do people like them? Well, before small cap discoveries, they were sitting at 4.5 cents, 5 cents share price. This is small cap discoveries, the conference right here. All of a sudden, they've gone from 4.5, 5 cents up to 8 cents on volume, right? Some investors somewhere, probably several investors, decided to at least buy some starter positions here in Nevis Brands. This is a tiny little, I think it's like a $3 million, $4 million market cap. Might be a little higher now with their share price up, but I think I went into small cap discoveries. I think they were like a $2 or $3 million market cap here at this point. Cannabis in a bottle. So shout out to Nevis here. Reclaim. Talking a little bit more about Reclaim lately, they're a little bit different from Nevis is that they're actually down. So this company has been pretty volatile, but also pretty predictable in that it tends to go down to 7-8 cents. It rebounds up to 11-12 cents, goes back down to 7 or 8, rebounds back up. Now we're back down here again. The main thing for me, take a look at Reclaim. Tell me if it's a better company today, right here, than it was back here, or even back here. Right? This is what I always love as a microcap investor, is being able to find these companies without the bias of the past, right? Without that negative, I'm never buying this freaking stock again because I bought here and I sold here and it lost me money. Like getting rid of that bias and being able to look and see, okay, it's arguably cheap again, or it's down closer to its 52-week lows than 52-week highs. Has it improved? Is it a better company over this time, or is it a worse company over this time? I like companies that are trending up with their financial fundamentals, and if their share prices are trending down as their financial fundamentals are trending up, that is a setup that I like. As you could tell, I posted this on X as well. I'm actually testing out their product to see if it's any good, because it is significantly cheaper than the competition. And the question kind of becomes, is this legit or not? Is this a legit product? This is their new product, Reclaim Protect. For $20, you get 13 months of protecting your data online. I think there's a potentially huge market for this, but it has to be legit. Finally, Hypercharge Networks. Of course, I have to give a shout out to Hypercharge. I introduced them at 5.5, 6 cents Canadian. They bounced up to about 13 cents. The problem is they have about 29 million warrants sitting right here at about 12 cents. So their share price is going to have a bit of a warrant anchor on it for a while. But I would still argue it was too cheap of a company down here at 5 or 6 cents. It dropped all the way down here to about 8 cents. I would still argue that's too cheap, right? This is an improving company. They are in the EV charging market. So even if you don't like electric vehicles, I think most investors can sit back unbiasedly and say, we could probably use at least some more EV charging infrastructure, because this isn't going away, right? Like one of the big arguments against electric vehicles is the infrastructure doesn't exist. This is an EV infrastructure company. So you can kind of invest before, if you're bullish on EVs, this is probably a pre-EV success company, in my opinion. Now they're back up to 10.5 cents Canadian. So congratulations. Again, was this small cap discoveries that, enough investors like the story, like the company, to ignore the warrants and look at this company at 8 or 9 cents and say that this is undervalued. Possibly that's what happened, because their share price is back up a couple pennies here. Good for them. So let me know. Again, I can't cover them all. I can't talk about them all. I can't talk about 50 companies. I would be here for the whole day. Those are a few of the ones that kind of stuck out in my mind. The nice thing about small cap discoveries is all these companies are good. That was one of the things we were talking about at the event, is that I could sit here and say, of all these companies, if you were a totally new investor, and again, this is not like financial advice, but if I was a brand new investor and I didn't know how to invest yet, and I absolutely had to invest in microcap stocks, I just wanted to so desperately, I would probably tell myself to just go buy a little piece of every single one of these companies, right? Instead of dumping 100% of your money into just one stock and losing it all. I mean, the nice thing that small cap discoveries does is they weed out all the chaff, right? They weed out all the less good companies, and you're just left with some of the best of the best. Some of these are going to struggle. That's always going to happen. Some of these are going to be complete bangers. There's going to be some in the middle that have their good days and their bad days, and their good years and their bad years. But overall, this was a fantastic list of companies. And yeah, I'd love to own a little piece of every single one of these if I had enough money. So great time, great presentation from Small Cap Discoveries. I didn't see New Path. That's New Path Health. I did not watch them. I've previously covered them. Very successful company. Nobody had anything but good things to say about NewPath, and nothing about, but bad things to say about the negatives that I brought up. Because I said, yeah, how is this company going to expand? It's kind of at its limit. People were like, no, 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 Cameron, it's going to expand by doing this or doing that. Management is proving out to be very good, very successful, very competent. I met a lot of investors that really liked NewPath. I did not specifically go see their presentation. Same with Glow Life Tech. I did not specifically go talk to Glow Life Tech. Glow Life Tech is a small position in my portfolio. It's a bit more speculative, and I didn't really see the need to go speak with them. One of the issues too with small cap discoveries with companies like Glow Life Tech and with NewPath Health is small cap discoveries does such a good job of keeping us up to date with, I mean, there was so many CEO interviews out in the past 6 weeks from small cap discoveries that I didn't feel the need to specifically to go talk to every company because I felt like I was already up to date. Are GSI, Gatekeeper Systems, and Zoom too big for those conferences? You'd have to go ask them. Not necessarily Zoomed. Zoom's an Israeli company, right? And this was an in-person event. So that would be very hard for Zoomed to attend small cap discoveries. They would have to come all the way from Israel. So I can give Zoom a pass. I would suggest right now that Gatekeeper Systems is probably a little bit too busy. They seem to be signing contracts every couple weeks. One of the problems with signing contracts so quickly is you have to be very careful what you say as a CEO. So it might have been detrimental for Doug Diamond of Gatekeeper to come to an investor conference and not be able to say anything, right? Because you can't let investors know something that is not publicly available. So I think Doug probably made the right decision by not attending if he wasn't able to talk or speak freely, right? If you have a period in your timeline where you're like, okay, everything is released publicly and I could speak openly with investors, go to an investing conference. But if you can't, if for some reason you can't, then it sometimes is better not to go. So as far as Zoomed and Gatekeeper Systems, that's my idea of why they were not in attendance. Now, let me know if questions, concerns, comments, right? I'll stick around for a little while. If there's any other small cap discovery stocks you want to, stocks that you want to talk about. But we need to just talk about this quickly because this is coming up October 9th, which is Thursday. So this is going to be the next investing conference, and it will be after this live stream and before my next live stream. So this is the Cantech Investing Conference, and this is October 9th in Toronto. It's partially hosted by Atrium Research, right? So again, this is another huge bucket of stocks. And you could see here 30, 35 stocks, something like that. Some of these I already cover or have videos on. So if you want to know about Avant Corporation or Beware Holdings or BQE Water or Enwave, I have videos on a lot of these companies. Go search on my YouTube channel to find an introduction. This conference coming, I don't know if the whole conference or just the booklet was paid for or disseminated on behalf of BQE Water and Savio Holdings. So I do think that BQE Water and Savio Holdings will get a little bit of a push, a little bit of a highlight or a spotlight or whatever you want to call it at this conference coming up here on October 9th. That is one of the reasons, partially, why I have kind of prioritized looking at Savio Holdings, Beware, Reclaim, and then, of course, BQE Water. I'm going to watch these four stocks a little bit more closely coming up on this October 9th conference in Toronto. Looking at some of these here, BQE Water, 5150. I haven't been that bullish on it. I've said it many times. They really need to do a 10-for-1 reverse split. I know many people will argue with me on that. If this was a $5 stock with more liquidity, you would have more retail investors interested in this company. you would have me more interested in this company, because what happens with a $50 stock, not a lot of like average retail investors want to buy a $50 stock, so they don't get a lot of volume. And when they don't get a lot of volume and you don't have you have this super high share price, larger investors can't buy it. Sometimes there's only 5 shares per day that gets traded for BQE water, and the price can jump around from like $50 to like $65 because there's only 5 stocks being traded per day. So it's very, 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 very hard for people to buy. And I know one of the first things you're going to say is like, well, Cameron, lots of the times you tell us that's a good thing. That's a superpower. That's, if a stock is hard to buy, that's when you should buy it as a retail investor, because other large investors can't buy it yet. And I absolutely agree. This is a little bit light even for me, right? When there's 5, when you can only buy like 5 shares per day, gets a little difficult. The other thing with BQE water, you got to be damn patient, because again, this high share price, it takes a significant event for somebody to want to buy the share price higher than what it's at. You could see they used to be at around, $18. They were benched down here for a while. Back in 2021, they benched up to what, $30, roughly $30. They stayed there for 3 years, 3 years. Now, recently, I say recently, but this was early 2024, they benched up to around $55. They've now been here at around this $50 to $60 mark for about 1.5 years. So is it time? Are we getting closer to the next bench up for BQE water? I do find it interesting that they are out there marketing their stock at an event like the Cantech Investment Conference, and yet they make it so bloody hard for investors to buy their stock. Do a 10-for-1 reverse split. Numbers look pretty good though, right? 6.5 times EV to EBITDA according to these numbers. And one of the nice things about this conference coming up for Cantech is that, of course, Atrium Research put out a 1-pager. This is only half the page. There's still another half page for each one of these companies, but each company has a 1-pager. And with BQE water, you have these, not all of these companies have it, but where they can, Atrium has included 2025 expected numbers as well as 2026 expected numbers. Some companies have even 2027 expected numbers. And you can see here with BQE water, what Atrium is guiding for potentially is an EV to EBITDA in 2026 of five times, right? So good company, not saying this isn't a good company. It's the stock that kind of concerns me. Sabio Holdings, can't say enough about this one, right? They're presenting again here October 9th, and then they're presenting October 14th with Radius Research, Martin Kegel, and then they're going to be presenting October 21st at Planet Microcap. So they have, Sabio Holdings has 3 presentations in 3 weeks. So they have a lot of presentations coming up. Now, I'm not going to talk a long time about Sabio Holdings. I made a video of them back here at 24 cents Canadian. I made another video of them here. I think it was at around 30 cents Canadian or whatever it was. That was back here in 2024, 250% gain. They went all the way up to 77 cents Canadian at a 52-week high. This is due to political revenue. The U.S. elections, they got a lot of revenue from that. And then ever since the U.S. elections ended, they have been traveling downhill. They went all the way down to 37 cents. Well, I could not resist because there is U.S. midterms coming up in 2026. Plus, this company's core business is increasing. So I have a video out there on Sabio Holdings. Go watch it. It's basically common sense investing versus the stock market. I was disagreeing with this 37 cents Canadian share price. I made a video on that. And that wasn't just for my paid subscribers. Like, people can just watch my free YouTube video. I do not make these videos just for my health, right? I'm making these videos for a reason. I had this little slide here, right? 37 cents Canadian just seemed a little low for me. It's now back up to 47 cents Canadian. And is this the primer here for their investing conferences coming up? I hope so. I hope that people like Sabio Holdings because you really need to understand the story. You really have to look at 2026 and 2027 to get excited about this company. This is not necessarily like a 2025 play. It's going to take some patience. It's going to take some time. But so far, it does look like investors are agreeing with me, and it's up a little bit in price. So when we look here at what Atrium Research has to say, they're saying 2026 expected numbers, 65 million revenue. They're going to continue this torrid pace of growth at 60% every year. The big difference here, you have to ask yourself whether or not you believe Atrium Research in that Sabio Holdings had 8% adjusted EBITDA margins in 2024. In 2025, they have been spending for growth, and it has crushed their adjusted EBITDA margins. The plan, the story, what we're being told by the company is that in 2026, now that they have spent for growth in 2025, they're going to see higher revenue, they're going to see some operating leverage, and they're going to rebound those adjusted EBITDA margins. And with $65 million of revenue, 10% adjusted EBITDA margins, that's going to give them about $4.3 million of net income, or about $6.3 million of adjusted EBITDA in 2026. And that puts them at an EV to EBITDA of 3.1 for a company growing 60-some% per year. So you could see, maybe you can't see, maybe you could see why I'm at least a little bit interested in Sabio Holdings. Atrium's price target 12-month is $1, and Beacon Securities lowered the price target down to 80 cents. But I mean, again, this was a 37-cent Canadian stock not too long ago. So I have interest in that one. What else am I going to talk about? Another one, Avantcor. This is one of those companies I always find it's interesting with investors, again, because what did I say up here? And I'm probably going to lose my spot. But if I was speaking to a new investor, I would probably say, forget trying to stock pick. Like, this is the list of small cap discoveries companies. I would suggest it might be safer to just buy a little bit of all 50 companies and get that diversification. And not all of these companies are going to be great, but at least these companies are good. And I find that a lot of investors, especially in 2025, have been very, very focused on finding the absolute best company, when sometimes all I'm looking for is a good company at a good price. Doesn't have to be the best company in the world, just has to be a good company at a good price. Hello, Avantcor. I might be the only one that actually likes this company. In my defense, it has rebounded. It dropped down here to a low of 75 cents recently after their earnings, which were okay. Again, not great earnings, but earnings were okay. Share price disappointed. This was $1.50 back here at the start of 2025. I thought this was overbought territory. That was pretty blue sky. At the same time, it plummeted basically 50% or more, I guess, down to 75, well, 50% down to 75 cents. Now it's rebounded back up to 92 cents. Is this again in preparation of the Cantech Investing Conference? Do people think that they're going to have a good showing? Do people think that the numbers are going to improve a little bit? This is one of those companies where Atrium, it's so predictable and consistent that Atrium actually has numbers for expected full year 2027 numbers, and they're saying 42.7 million of revenue, adjusted EBITDA margin, again, kind of similar to Sabio, except they never had good margins. They're basically saying margin improvement every year. That's going to give them $4 million of adjusted EBITDA in 2027. And that puts them, again, not quite as cheap as Sabio, but 4.7 times EV to EBITDA. One of the common themes on my channel right now, you're seeing that. What have I covered? A stock that was 6.5 times, a stock that was 4.7 times, a stock that was 3.1 times. Definitely not chasing some of these high valuation, high flying bangers. I'm kind of looking for some GARP stocks here, right? Growth at a reasonable price, reasonable valuation. This was their last earnings, which I said again, it was an okay quarter, not a great quarter, but okay. That is the story of Avant, but if they can keep performing okay, I hope share price is going to recover a little bit, re-rate to a little bit of a higher price right there, in my opinion. Again, most of these companies I talked about, I have a video on. I have a video on Avant down there. I'm done. That's it. That's my whole presentation. I am finished. Thanks for suffering through that. But I had a lot of stocks to talk. There's 2 investing conferences I had to talk about here. So that was 40 minutes of talking, which is about 10 minutes more than normal. So questions, comments, concerns, this is your chance. I'll stick around and see if there's anything else you want to talk about. And I answered some of them already. So let's see. What have I not gotten to? Good points. Thank you. That was probably on my discussion of why Gatekeeper Systems and Zoom Technologies was not at Small Cap Discoveries. Yeah, it's hard for Zoom Technologies to travel unless they're already here for some reason in North America. But Vancouver is a long ways away from Tel Aviv. That's for sure. Legend Power Systems, LPS Power started moving from 10 cents. Was there some news? Yeah, they signed another letter of intent or memorandum of understanding or something recently. Basically, what Legend Power Systems is trying to do is find people to sell their SmartGate systems for them for a commission, for a cut, because Legend Power Systems doesn't really have the cash to go out there and promote themselves. Nor would that necessarily be the smartest thing in the world. Legend Power Systems product SmartGate is basically an electrical box that attaches to a building which regulates the power in that building. So you don't have power spikes and you have greater control of the power usage, delivery, and management in your building. I think it's a great product. I think it's got blue sky potential. I think that every building in North America and the world should probably have a SmartGate system in it. The problem with these small companies sometimes is they run out of cash, right? I've seen this so many times where so many people invest in a moat and you find this company with a moat and it's got this fantastic product and you think it's going to the moon, and it might, but many times they simply don't have the cash to market themselves. They don't know how to market themselves, and it ends up stuttering, staggering, sometimes failing. So Legend Power Systems, kind of the joke is right now, if you buy it at 10 or 11 cents, wait a few months, it'll go up to 20 cents and then it'll drop again, because it's done that 3 or 4 times now, and it seems to be doing it again. But yeah, it wasn't not necessarily a contract. I don't believe it had money involved. It's just they are finding companies, and this was a larger company. This wasn't a tinier company this time, but they are finding companies to sell their SmartGate systems, right? Hi, Cameron. Could you explain why you think the Glow is more speculative? They are growing. Well, they're speculative because they're so tiny. There's no company out there that's got a 5-cent share price that is not at least a little bit speculative. Glow has roughly a $10 million market cap, doesn't it? And I think their revenue is around $2 to $3 million. So they're gaining towards their valuation. But they're speculative because, in my opinion, this is just my opinion, but I ran the numbers a while ago on one of my live streams, and I showed that it's probably going to take about 4, 5, or 6 quarters of growth to basically have their financial fundamentals catch up to their valuation. And so when you have a tiny company that people are probably overpaying for because they expect high growth, that's speculation, right? That's a little bit more speculation. That's definitely more speculation than a company like Avant, for example, that's got $40 million of revenue, and the only real problem is they don't convert that revenue very well to the bottom line, to the net income. With a few changes, the company could improve, but it's still a very legit company. You could look at different valuation metrics. Glow isn't profitable yet, so we're basically looking at evaluating Glow on a price to sales basis. We can't evaluate it on an EV to EBITDA. We can't evaluate it on a P to E. We can't evaluate it on a price to free cash flow. So when you have no way to really value it on any kind of bottom line income, then it's speculative. So that's my opinion anyway. Current Water Technologies, any growth potential from here? I got in at 4 cents in 2023. Where is this one at now? So no. So I made my position on Current Water Technologies clear a long time ago. So I'll pull this one up here. You remember, it's back up to 3 cents. Somebody must have bought it. So I bailed on this one a long time ago, and that was because I found that the CEO was saying things about the company that he had said on another company, the same verbiage, like 15 years ago. So I found that the CEO had promised things in the past that he had not executed on. And not only had he not executed on those things, but he was promising the same things many, many, many years in the future. And I guess just hoping that the market would forget. So if you want to talk about like a speculative stock, this is a speculative stock. I'm happy that some people possibly bought in at 1 or 2 cents, and now it's up to 3 cents, and maybe you made money. The thing with Current Water Technologies was always that, oh, we have this partner and this partner is going to be our path to success, and then it just never seems to work out. So I don't cover them anymore. I don't provide coverage for them anymore. I don't talk about them anymore. I have no idea what their growth potential is anymore. All I know is that for years I was promised things from Current Water Technologies, and they never seem to deliver on those promises. So that's when I lose interest, right? Thank you for the great presentation. No problem. Glad you enjoyed it. Great presentation. Thank you. Have I ever looked at ANRG? I don't think so, but let's see here. Energia. This one rings a bell, but I can't say that I've ever looked at it in any kind of detail. Let's see here. What do they do? Up 362%, 366% in the year. I wish I looked at them. Those are nice returns, whoever owns that one. So absolutely congratulations. The problem is $491 million market cap. So that's already close to being a small cap stock. That's kind of somewhere out of my niche. Provides solutions for the generation of renewable energy and conversion of waste to resources in Italy, North America, Europe, the Middle East. It operates through capital sales services, builds, owns, operates projects, a waste processing solution. Nope. Sorry, I've never looked at this one, which is too bad because it looks like it would have been up my alley. I wonder if there was a reason. Are they like highly unprofitable or something? Why would I? Yeah, that's probably why. So, first glance for me is how come their EPS is so bad? And if I did look at them, maybe I looked at them back here and they were significantly unprofitable, right? So I'm not sure if they're profitable in EBITDA or what's going on with this company. No. So this is why, my question would be, why is it up 366%? If it's so incredibly probably cash burning, but incredibly unprofitable. $120 million declining revenue, and they're up. So this is probably going to be a highly speculative stock, right? The revenue is declining. They're significantly unprofitable. Not my niche. Not my niche. This is not something I'd be interested in. So look, you're not going to catch them all. But here's the thing. I compare sometimes investing to dating. If you really don't know, if you're a guy dating and going to the bars and you really don't know what you're doing and you have no game and you don't know how to talk to women and you go buy 1,000 different women a drink, eventually you're going to win on one of them, right? You're going to have one girl who's like, damn it, there's no other guys that are interested in me. And this guy bought me a drink. So, you're the lucky winner tonight, right? And you're going to think that you're just the greatest man on earth because you got lucky and finally your strategy worked. Even though it failed 999 times, it succeeded that one time. And that's what I would look at for a stock like this, right? What I'm trying to do with investing is develop more of a consistent strategy. It's not always going to be right, but it's not going to be very speculative. I don't have to lose sleep at night speculating on the next press release or what's going to happen. I like finding companies that are growing in revenue and growing in profitability and that are not growing in share price. And eventually, once that share price corrects, then that's typically when I tend to make my money. It's very repeatable. It's a lot more predictable. And I'm not going to have a 100% success rate, but it's definitely going to be higher than like 1 out of 1,000. And that's what I do. So it's more like dating strategy, where if you have game, if you have some conversation, you're an interesting person, you have things to talk about, you know how to talk to women, you've got a strategy to go to the bar, and you can consistently go to the bar every night and walk out with a date, right? That's more what I'm looking to do, not just these kind of one-off situations. And I look at a company like that as more as of a one-off situation, because it looks like the revenue is declining and it's significantly unprofitable. So why is the share price going up? Probably because it's being promoted. That would be my guess. SunV. So Stardust Solar, one of these things that's not really my niche. I'm not really bullish on solar energy. I've had these debates. I love debating solar energy, by the way. If you're open-minded to having a conversation, have a conversation with me someday about solar. I'm not big on renewable energy. Wind energy, solar energy, I think it's uneconomical. I don't think it's realistic. I agree with like Elon Musk, where it's like, if they ever can just get solar panels a little bit more efficient, go stick like billions of these things out in the desert, I would support that. But like running around converting farmers' fields into like solar fields, I don't really agree with that at all. I'd rather have farmers' fields, right? So I'm not super big on a lot of these solar energy companies. My guess is, just from the name, that's what this is. So yes, it operates as a franchisor for renewable energy installation services. Let's take a look here. It looks to be pretty new. I mean, the annual charts only go back to 2023. They've had a little bit of revenue growth. They're still unprofitable, though it looks like they're becoming a little bit closer to an inflection point of positive income. Their EBITDA looks to be flat, but still negative at $5 million. This is, again, the type of company that I would have to look into it, of course, a lot closer. But my question would be, when is this company going to be profitable? When is it going to stop burning cash? I didn't look at the cash, but I simply do not like investing in companies that are just burning cash. And this is, look, increasing operational cash flow, negative 231,000, negative 1.1 million, negative 2.9 million. It just burns more cash every year. It's going in the wrong direction for me. I'm looking for companies that are trending up. I'm looking for companies that are better in 2024 than they were in 2023, that are better in 2025 than they were in 2024, and they're going to be, I hope, my prediction is better in 2026 than they were in 2025. This is just looking at this company for 5 seconds, but I could see why share price has gone nowhere, because cheap market cap, that's what you're gambling on here. But they would have to show significant improvement, because what I'm seeing is a company that's going to keep burning cash. And where are they going to get more cash from? Who's going to give them debt? Who's going to give them money through equity, right? Those share price, you're just going to get more and more and more dilution, right? So that's a very quick look at it. But again, with the whole dating strategy, repeatable, revenue growth, improving company, good management, profitable or close to profitability, at least to the point where you could see, like some of these companies, Hypercharge Networks isn't profitable yet. But I could sit here with Hypercharge Networks and say, it's going to be there. The Hypercharge Networks is going to be consistently profitable in somewhere in the next 12 months. And if they're not consistently profitable in the next 12 months, then I'm out. I sell my shares. I was wrong. The investing thesis was wrong, right? And but it needs to be at least close to that point for me. Otherwise, I just don't really have any interest. Building a position in CRMD seems grossly undervalued with growing EPS and trading under 10 PE. Yeah, I like Core Medics. It's been volatile. It's been volatile for sure. So the main thing is, this is a pretty polarizing company. I'll show you this one. So they do what am I supposed to say? I can't say it. They have products, pharmacy products that they're bringing onto the market, which is always high risk. It's a biopharma stock, right? So they have this DefenCath, which they're selling, and they have a protected moat in North America for their pharmacy product DefenCath for the next year or whatever it is. And then after that year, once they lose that moat, the price is going to decline. It's going to go down. Because of that, their share price has been all over the place, but they've been producing ship piles of cash instead of investing that cash into growing profitable profitable businesses, which is what I like, they have been buying companies with other speculative products, right? So what you see here from CorMedix is just this incredibly volatile share price because of that. They produce cash. That cash isn't going to last forever. They use that cash to buy other companies with speculative products. And then depending on if the purchase is a good one, the market thinks it's a good purchase and this product is going to improve, then the share price goes up. And I believe it was here they bought Melinta. Was it Melinta? Or was it here they bought Melinta, and the market did not like that purchase, did not think that that product has a significantly high success rate, and because of that, share price went down. So volatile, volatile, volatile. I like it because of the cash production, and if they ever slow down that cash production, then I'll probably lose interest. But when I'm looking at CorMedix, I'm looking at the cash and the cash only, right? Good information for me on Glow. Yeah, and Glow is the other thing with them is they have 20 million warrants that fall off the books here in October. So that's good for Glow. But they also have another 50 million warrants that fall off the books. Hopefully, maybe they get executed, but I think they're 6 and 7 cent warrants and they expire in March of 2026. So the plan is that Glow Life Tech isn't a 2025 stock. It's a 2026 play. You have to wait for the earnings, the financials to catch up to the valuation, and you have to wait for those warrants to fall off the books because the warrants are providing an overhang on the stock. So go take a look at the warrants, go take a look at the valuation, and go from there. ANRG announced like a dozen contracts. That's why they're up. Good for them. It's not in their earnings yet from what I've seen. I always wait. And again, when you say contracts, go read those. Are those contracts? Is that actual money? Do they give you a definitive timeline for that money? Or was this a letter of understanding, a memorandum of understanding, a letter of intent, any of that other language? Or was it an actual contract with actual money on defined terms? Because what you'll find with a lot of these companies when they're struggling, they need a higher share price. They'll go find somebody who's willing to say, yeah, sure, we'll partner with you. I hate partnerships. Biggest scam on earth. Oh, we partnered with so-and-so. That means nothing. That means nothing, right? I need specifics. I need terms. I need money. Did any money change hands? Go take a look at that. I traded it for a nice gain. It was on market call one day. Good for them. It's awesome. My analogies are on fire, Cameron. Thank you. I'm fired up today. My brain's just been going 100 miles an hour. I mean, I just had small cap discoveries, 50 stocks. Now I've got Cantech for 30, 35 stocks. October 21st is Planet Microcap. That's another 70 stocks. I got, 150 stocks rolling around in my brain. I have to think of some bucket to put these stocks in, right? Some way to describe how and why I research in some or invest in some and not in others. And it all comes down to strategy. Whatever strategy works for you. If you're good looking enough, you can get away with just buying a woman a beer and that works for you, right? But most of us have to actually have a strategy. Most of us need a plan to repeatedly find ways of succeeding. And, that's mine. And I won't get out of it. I build a plan that works for me and then I stick to it. And I don't go outside of that plan. Even right now, like commodities are going up, gold is going up. I'd love to go chase some gold stocks. I've never had luck. It's not part of my strategy. I'm not very good at it because I'm rusty in it. I haven't invested in commodities in like 8 years. So I stick to my plan. Thank you for your feedback on Current Water Technologies. I do remember you said to only invest your coffee money in it back in 2023. However, I invested $3K so far at an average price of 35. Oh, geez. Go look up their CEO. Go speak to the company. If you've got money invested in them, these small companies will answer your questions, should answer your questions. Ask them questions. Put them on the spot. Make sure you're asking what you need to hear to make yourself feel comfortable with the investment, comfortable with holding your shares, and go talk to them because, yeah, I'm out on Current Water Technologies. They were very speculative from the beginning. But again, it's one of the hard things with investing is that I love the battle, especially in 2025. We have this growing battle between the quantitative investors and the qualitative investors, right? You've got like the Ryan Telfords on one side, the quant investors just looking at the numbers and nothing matters but the numbers. Although, credit to Ryan Telford. Why I love Ryan Telford is that he also has sentiment and timing in his calculations. So he does, whether he admits it or not, he's got a people factor in his numbers. But, you've got the quant investors. And then you have the qualitative investors, the small cap discoveries. You're doing nothing for 2 days but speaking to CEOs and building trust and building conviction and having those word of mouth conversations. But one of the things that I've warned people is go look up the research and the statistics on how likely you are to know when somebody is lying. Usually you would think, like most human beings think, I'm going to know when somebody's lying to me. Maybe I'm not going to be 100%, but 80% of the time when somebody lies to me, I know that they're lying to me. Okay, you know what? I missed a couple, so let's say it's 50-50. I'm still pretty good at it, right? I'm not going to get them all, but most of the time, half the time, I'm going to know when somebody's lying to me. If you actually go look up the statistics, it's terrible. Most people do not know when somebody is lying to them. And it's actually worse, it's lower. You would think it'd be 50-50 because luck of the draw, some people are going to be lying, other people are not. But it's actually worse than that because typically the people that are good at lying do it a lot and they're good at it. So typically, you're wrong. You think the person that is telling you the truth is lying to you, and you think that the person lying to you is telling you the truth. Now, why does this come up with investing is because you have to be careful in how much weight you put into the qualitative part of what these companies are saying. Oh, we've got these letters of intent, memorandums of understanding, partnerships. We've got all these wonderful things. If they're saying stuff and it's not showing up in the numbers, I don't go with that, right? I only take qualitative investing to a certain point. Promises only go to a certain point with me. I need to see that in the numbers. So go challenge current water technologies on the numbers, right? That is what is going to make or break your investment. Be careful on the qualitative. I'm not saying don't do qualitative. I love it. I love talking to CEOs, meeting with investors, getting opinions. It helps get me in the right frame of mind. But I use that qualitative to build my expectations, what I expect from the company, and then I use the financial fundamentals to ensure that the company gets there and they meet my expectations, right? I'm not guessing, I'm not speculating. I'm basically, using the qualitative to inform my quantitative. Cam is fully out on that one. Cam was even waving his hands like, no, get that stock away from me. Yeah, I might have been doing that. You got to go look up what Gene said like 12 years ago now or something like that. It was a little surprising to me. I'm torn. Don't like companies that burn cash and don't like companies that stake money. They drum up from moving electrons. The FOMO is strong. Listen, there's a difference between investing and trading. You have to make that clear. I point that out on so many different companies. I am not against trading. I am not. You know why we're all here? Because we want to make money. You know what the best investment is? The one that's going to make you money, right? It depends on the strategy. I trade myself sometimes. I get bored and I talk about timelines. Now, the thing is, as I always set a timeline, people think my timeline is 5 years or 10 years, or I'm going to coffee can this stock forever. It's not. Sometimes my timeline is 24 hours or a week or 2 weeks, right? I will trade. So if a stock is going up, everybody says it's going up and everybody loves it, and I think it's shit, but it's still going up, and I think I can buy it today and sell it tomorrow for more money, I will do that, right? You have to be careful with your position size. You have to be willing to stop loss out. You have to be willing to say, I'm wrong. You have to be willing to not fall in love with the stupid thing because it's making you money today and you just think, oh, it's going to make me a millionaire. You have to be very careful, again, with your strategy. But I mean, if there's a stock that's going up and you don't want to miss the FOMO, that's fine. I've invested in those, but you have to be clear with yourself. Are you investing? Are you going to fall in love with this company? And when people start talking about diamond hands and hodling and they're selling and the stock is going down, are you going to be that diamond hands guy that just loses all your money? Or are you going to sell at the top and be one of the people that cashes out? Are you investing or are you trading? I don't mind trading every once in a while. I do it. So absolutely. Go Kraken, NTG Clarity, and Copin. Not sure I've heard of Copin. And URL. Go Name Silo. Yeah, this is a real coming out party for Name Silo for sure. Even I was skeptical until I saw Paul's presentation and saw Sewer View. And I hope once that presentation is released in 2 weeks that people get to learn more about Name Silo. What do you think that could do DRX on 2026? So the ADF Group is the steel company out of Quebec. They've been crushed. They're down from $20.50 Canadian down to like $5 Canadian. Now they're back up to $8 to $9. Look, rumors are, I just heard this tonight, is that the steel tariffs are apparently coming off Canada. Mark Carney, the Prime Minister of Canada, is meeting with Donald Trump on Tuesday. There are rumors that Mark Carney is going to give up something. The rumors are he's going to invest in defense to meet the NATO requirements. And because he's going to commit to defense spend, Trump is going to remove the tariffs on steel. So I'm recording this Monday evening. There is a chance that ADF Group has a really good Tuesday. Go look at that information tonight and go check it out. I don't know how legit it was, right? I've only seen a couple reports, which at this point means it could be fake news for all I know, but that's what I've heard. If the steel tariff, I don't know what ADF is going to do next year. We've got no idea. Because here's the thing. If Canada and the United States become friends again and the tariffs come off steel and USMCA stays intact, then ADF Group, I think, can go back to a $20 stock. It's a good enough company to do that. The problem is, which is like over 100% returns from where it's at now, like 150% returns. ADF Group is a good enough stock to do that. The problem is, what if this rumor isn't true? What if Canada and the United States continue to be enemies, which is, predictable considering that the US is going more and more conservative every day and Canada is going more and more liberal authoritarian. So it's not very likely they're going to be friends at this point. And what if the USMCA gets forced renegotiated in 2026? And we keep the steel tariffs, and then on top of that, we've got additional tariffs. I mean, ADF Group could get crushed back down to $2 to $3 if that happens. So I don't know, because so much of ADF Group's future right now relies on the macroeconomics. And the macroeconomics, I mean, if you can predict what the hell Mark Carney and Donald Trump are going to do, good on you, because I sure can't. So I don't know what ADF Group is going to do. Completely unpredictable for me. I'm out of GSI, that's Gatekeeper Systems. I'm the cheeky sell at 254, taking profits for the next one. Haven't found it yet. Congratulations. Congratulations. That is just stunning, like life-changing money. I started covering them at 20 cents is when I was interviewing their CEO, Doug Diamond. I'll never forget Doug just saying over and over at the end of every CEO interview, he just said, buy your stock and hold it forever. And Doug was right. He didn't let his shareholders down, man. That stock is absolutely crushing it. If a CEO is asked about earnings growth and he answers, I can only say the momentum continues, that's right out of Zoom Technologies CEO. Damn it, I can't remember his name that comes and does all the presentations, but that the momentum continues is like his tagline, and investors love it. And the share price goes up every time that Zoom Technologies CEO says that. So the momentum continues. Is that something that he could legally lie about? Can that be trusted as fact? No, because that's what momentum, what does that mean? Like, we've seen that. It might be revenue growth momentum, but they suffer on the bottom line. I've seen that lots, right? Oh, the momentum is good, and then earnings pop up and revenue is up, but their net income is way down because they had to spend for growth. They had to maintain their momentum through spending, through growth, and their net income is absolutely obliterated. So that you can't trust that as facts. Momentum in what? We've seen cases where momentum continues because the revenue is up and the backlog is absolutely gone, right? What are we talking about for momentum? You need more specifics than that. That means very little, right? That means very little. That is, if I was a CEO, that's what I would do and say all the time. I just run around talking about momentum. People love it. People love the high energy positivity. If you're a CEO watching this, right? High energy, positivity, the momentum continues. Investors love that stuff, right? It doesn't matter momentum and what, or the momentum and our expenses are incredible. Our expenses are just, we cannot stop those things. It's incredible momentum in how quickly we can hire sales staff, right? Last year when the CEO of Kraken Robotics sold their shares and there was panic, I liked how to ask your viewers to keep calm and hold it, and it has gone up 5 to 6x as of today. Yeah, so this is something we always talk about. The common conversation to have is that there's only one reason to buy a stock. So when insiders go and buy a stock, typically that's bullish. I'm not super in agreement with that, but I can agree with that at least a little bit, that if insiders are buying a stock, it's probably a good thing, right? Especially a CFO. Now, if there's insider selling, the market usually sees that as a terrible thing. I don't believe that, because management are people too. You don't know if their kid is going to college, their wife has demanded a new car, they're going through divorce, they need money to buy more options of their own. You just don't know why the hell they're selling shares. So you have to be very careful to not get too negative when management sells shares. I hate to say it, but myself personally, and if it's interesting, go ask Ryan Telford on X and ask him if there's any correlation between share price success and insiders buying or selling stock. It's amazing how little, over the long term, how little correlation there is between insider buying, insider selling, and share price success. As far as I'm aware of in the actual numbers, there's very few, there's not a lot of correlations. You won't talk to a lot of the most successful investors like Paul Andreola and Ian Castle, and you won't ever hear somebody bring up some metric like price to insider shares traded per year annually, right? There's no metric like that. So you have to be skeptical. I'm not saying don't question it. You have to go ask questions. But it's definitely not a reason to throw the baby out with the bathwater sometimes. It's definitely not the reason to just, invest your life savings in a company when an insider is buying. I've seen insiders buy and the share price goes down. Recent one company that I'm looking at that's been presenting at Small Cap Discoveries and is presenting at Cantech is Tribe Property Technologies. Tribe Property Technologies, that's been getting funded by their insiders between about 45 cents and 50 cents Canadian. Insiders have been mostly funding this company. Share price is down to 32 cents. If I was just investing through insider buying, I'd probably go take a look at Tribe Property Technologies, but it hasn't been successful yet, right? Versus, you look at Kraken, they've sold a couple times. They've also been a very successful stock. So really you have to question it, but then you have to stand back and look at it big picture, right? Let's see here. I think I'm done. An hour and 16 minutes of talking. My wife is probably missing me by now. I've had a lot of great questions, a lot of great comments. Thank you. Thank you for the engagement. Thank you for all the questions. I really enjoy getting put on the spot. And even sometimes this helps me test my own strategies and investing philosophies and even stocks that I own, because there's no more honest answer than just being put on the spot and having to come up with a solution or an answer to one of your questions. I really appreciate it. Thank you for watching. I'm going to shut it down here. Go watch the Cantech conference there on Thursday. I can't wait to see what pops up for share price and volume. I'll be back in a week for my next live stream, always on Monday evenings. Really appreciate your time. Good luck investing out there. Hopefully we have a good week.